The markets are pressing against critical levels, and the next few days could set the tone for months ahead. Welcome to the weekly digest by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Tonight's strategic map. Volatility. Has it really topped, or is it just catching its breath? Dollar index. Are all ducks finally in a row for a rally? Bond yields and TLT. Consolidation patterns getting louder. Canadian yields. Watch the monthly closure closely. It's critical. Baltic Dry Index. Is global trade as stable as it seems? Major indices: Russell, Nasdaq, Dow Jones, and S&P 500. Multi-angle, multi-frame evaluation. S&P 500 sectors and large caps. What the monthly candles are hinting about May and beyond. Special features of the day. A global scan. Monthly prospects for China, Hong Kong, India, Japan, Australia, UK, Germany, and Canada. Technology sector deep dive. The XLK ETF. Strength or fragility. A massive shout out to our 20,000 plus subscribers. You are the driving force behind this growth. If you are new, now the perfect time to jump in. Subscribe, like, share, and drop your favorite stock or sector in the comments. And stay tuned. Starting May 1st, Investing Angles will launch premium subscription services. Early access opens Monday, giving you a chance to secure the best rates and ensure uninterrupted insights. Details coming very soon. Don't miss out. Let's dive into the charts. And as usual, we start with the Volatility Index. This is the daily closure on Friday for Volatility Index and for its futures. If we look at the daily closure, everything looks bearish, and we can see that volatility, for example, it lost 50 days moving average, and there is a very good chance that we see a decline at the beginning of next week. Daily looks fine, but if we start to look at the bigger frames, for example, the weekly one, there is a concern, and I'd like to bring it to your attention. So these, we discussed it before, that the candles were not sufficient for flipping the entire trend bearish, and now we have three red candles that failed to close below the low of the red of the green candle at 2068, for example. So it means that we have a bullish continuation, potentially bullish continuation pattern, which is called rising three methods, and it is clearly seen here on the futures. So the three red candles are within the body of the green one. So if the next one forms a very strong green candle moving upward, this wouldn't be a surprise at all, and it could be even bigger than the previous green one. Well, that's the perspective. However, it's not the biggest concern yet. So if we start looking at the potential monthly closure, and we start with this one, with the futures, we can see that there's a potentially bullish candle, and now it will be the second closure above the monthly 200 monthly moving average, the red line, and this is huge. I think that last time it happened here in 2022, when we see two green candles above this line. So this one doesn't count. So this 20, you can see the 2021 here we have one candle up, another candle down, so it was back and forth. But here in January 22, we start seeing a strong trend upward, which stayed about the 200 months moving average for almost a year. So I think that we are looking for something similar here. And if we look at the even bigger frame, let's say the 2 months frame, which is also closing in 4 days, this is a strong bullish formation. And the 4 months frame, another bullish candle. So this is a very strong signal, potentially strong signal. Even if in the next 3 days, last 3 trading days of the months, volatility declines significantly. It's still hard to believe that it will flip the green candle into the red one. Well, that's the perspective. And if we look at another chart that we discussed a couple of days ago, I said that this is a quarterly chart. I said that there is a technical footprint of several indicators that I'm monitoring, and this technical footprint is resembling this one that we saw in 2007, 2008. So not this one and not the red one, particularly the purple one. If we are looking for something similar, well, this is going to be a very strong correction, and we are just witnessing the beginning of it. The next chart is Elliott Wave formation that I am tracking since the middle of April, when I said that there is a potentially bullish flag, and once this flag is complete somewhere in this blue rectangle, we would be looking for a move upward with these particular targets. So far, right now the volatility is at the bottom of this blue rectangle, and I adjusted slightly the targets. Let's see how it plays here. So far, the wave down has been corrective, and the chances for burst upward are significant. So this is the perspective for volatility. Obviously, if we are looking for bullish volatility, it means quite the opposite for the market. Now let's have a look at the dollar index, the next chapter. So what we are seeing here, dollar in the middle of the week on Tuesday, it formed a very strong bullish engulfing, and the 3 candles up here were not able to reject it or confirm. So most likely it's going to be a bullish flag here, and we would see a move upward. The weekly is not conclusive here, so this candle could turn to be bullish, but it also could be a bearish continuation. The same thing is happening on the monthly frame. So we see the 3 white soldiers and now a reversal tower top, and this candle is crucial. If it closes below the low of the green one, it would most likely be reversal. However, if the candle pulls in the next 3 days about 2%, 2.3% upward, this could be a different story. But this is not the most concerning thing that I would like to discuss. This is, let's return to the daily frame, and let's have a look at the MACD indicator. So this is MACD, and I'm bringing it that like the entire one for since year 2000. If we look at it, this is the line that they charted here. This is how low it is right now. Yes, this is MACD, and you can see it started curling upward. So this is how low it was, and in this century, it was below this line only 2 times, in year 2001 and year 2002. Both times it technically burst upward, correspondingly about 12 and 6%. Well, if something similar happens this time, I wouldn't be surprised. So I think that everyone should be prepared for an immediate move upward. And that's why we were looking for another chart. This is the supporting chart, Elliott Wave formation, 30-minute chart. And we are looking from the bottom that dollar index potentially made on April 21st. So the first wave upward is a leading diagonal here. We have a very nice confirmation of it, a return almost to the level of the origin. And now we have an impulse, 1, 2, 3, 4, 5. And now I think that dollar is working on a bigger wave too. ABC, typical ABC formation. Wave C could be an ending diagonal. Let's see how it closes. However, if it takes the blue pass, it is also possible here because this wave, the wave upward here, it looks more corrective than, more impulsive than corrective. So there is a very good chance that this is also wave one of wave three. I didn't mark it here because it's a bit premature. Let's see how it ends. Obviously, the move below the blue line here will invalidate the blue count and the red will become the primary. And this is the potential channel for the dollar to rally. And if you look at the bigger frame, this is what we've been tracking since year 2020. Nothing changes here. Potentially dollar forms a bullish flag here. Once it's complete, the target will be here somewhere between 113, 120. That would be an ideal target area. So that's all for dollar. And now let's move on to the next is bond market. Let's have a look at the 10-year yield. So far, it has quite a few questions that I'd like to be answered by the end of the month. And right now it is an inflection zone. Daily is bearish after the Friday's closure. Technically, it confirmed a move down. However, I'd like to see it breaking through the 200 days moving average, which could mean a strong support together with the PSR. And on the weekly frame, the 10-year yield looks bullish because of this strong bullish engulfing and just two consolidating candles. If we look at the bigger frame, let's say for an 8-day frame, which is closing on Monday, so far it looks bullish either. So the green candle, the previous green candle is a strong bullish engulfing, and this is just a consolidating one. I think that the similar formation we have on the 10-day frame, which is also bullish so far. However, it can become neutral, and the 15-day frame is also looking bullish. However, we need to wait for another 16 days until the next candle closes, but the previous one is definitely bullish. On the monthly frame, the things are unclear at all. So this doji so far can become bullish or bearish depending on the level. And this is something it's right now difficult to estimate. We need to wait, need to be patient, wait until the monthly closure on April 30th. If we look at the Elliott Waves, a short-term chart for 20-year yield, we have an impulse upward, and most likely this is an extended wave 2. At this point, I'm counting for it. The wave has been corrective so far. If it makes below this green line, it will be ideal to start in another impulsive wave upward, wave 3 towards 586 and bigger towards 6.4 in the next couple of months. So that's the perspective for it. This is the long-term, very long-term chart, let's say all-time chart, which we are tracking since December 2022. No changes here. Most likely yields are exploring wave 2, making it bigger, somewhat similar that they did in years 1959, 1963 during the JFK tenure. And once it is complete, we would expect a move upward, whether it's going to be this wave or another wave like an ABC formation. So another wave up is coming. Now let's have a look at TLT. So we have three epic failures here. First of all, TLT had a chance to form a reversal, to form a bottom, but it failed just by a few basis points, and it formed this indecisive doji, which has all chances to become an evening star candle. So the same on the 3-day frame. So it closed just 2 basis points below the necessary level for forming a bottom. This is a very significant thing. I think that, and the same, somewhat similar situation on the weekly frame. So the weekly candle didn't even challenge the 8 weeks EMA, the yellow line here, and it is considered right now a consolidation candle. So far, if we look at the monthly frame, the monthly is looking for bearish continuation candle. No changes here. And if we look at the trends, all trends here are bearish. If we look at the Elliott Wave chart, I made minor adjustments. So far, it's doing very similar to going on our path that we discussed earlier. So far, the wave upward has been corrective, wave down has been impulsive, most likely impulsive. And this wave could be wave 2, an ABC type of correction. The purple rectangle is an ideal target for wave C of 2 to complete here. Once we see a strong reversal, it would mean that most likely wave 3 would start downward. However, at this point, I'm not excluding a potential higher, longer correction, which would look like this. For example, this would be wave A, B, and C here. So let me change the color of this to match the A, B, C count. So this is another possibility at this moment. However, I'd like to emphasize the purple count is more probable at the moment. Now let's have a look at the spread. 10 minus 2-year spread. A very concerning closure on Friday. Bearish candle, bearish engulfing candle over the Harami, which is also hanging man candle. Now the chances for a move lower are significant. Now we need to watch closely on how fast would it go. The same, nothing changed on Elliott Wave chart. Potentially, I'm tracking a completion of an ending diagonal. Once it's done, we might see a return, a very fast return into the negative territory and towards this particular target, minus 0.536%. Well, that's a concern, and we know how it would end. And the final chart in the bond section, this is for Canadians, for my compatriots. This is the monthly candles for Canadian 5-year government bond yield, and it looks like if nothing is changing in the next 3 days, it will be a strong bullish engulfing here. And if it makes a candle like this, I would expect the rates to fly in the next months and probably beyond. So far, the chart is remaining the same as we shared it first with our subscribers on June 2024. Well, that's the perspective. Let's hope the candle in the last 3 days of April transforms into something bearish. So far, the odds are with the bulls. And the final discussion in our strategy section is Baltic Dry Index, which is often viewed as a leading indicator for the market moves. So let's try to evaluate what we are seeing here. First of all, the week closed with a strong bullish engulfing, and we are looking for potential upward movement here. Maybe we'll see a very strong move in the market as well. However, if we look at the bigger frames, this is where the concerns start. First of all, the monthly closure, potentially a strong bearish harami and a break. It will remain below all major support levels. If we look at the bigger chart, let's say 4-month chart, we have a strong bearish tower top here, and this candle would be just a consolidating point moving lower, and the trend on the 4-month frame is also bearish. 2-month frame, most likely the two consolidating candles after 3 black crows. Well, that's not a good picture for the Baltic Dry Index. Let's see how it closes the months in the next 3 days. It will be a very educating and very interesting. And this is final chart for the Baltic Dry. This is the one that we used Elliott Waves trying to project its move back in December 2023. So far the index moves almost with a great precision within the rectangle and is hitting right now this particular targets. Whether it moves higher here or makes us slightly lower, I think we'll see it in the monthly closure and the larger frames closure as well. So this is all I wanted to say about Baltic Dry Index. And we start our review today, market review with Russell weekly analysis. Let's have a look at the candles. First of all, I'd like to say that Russell didn't close very healthily in the week on the daily candles. First of all, the Thursday's candle was an inside one, and the Friday's one was technically a hanging man, again inside the previous candle. So this is a kind of concerning combo, and if we see a strong reversal in the next couple of days, it would be the beginning of a new leg down. If we look at the weekly frame, we discussed it multiple times on different indices. So the weekly needed to close above this above the red candle high in order to form a bottom. Unfortunately, it didn't, and it got rejected at the 8 weeks EMA, which is a yellow line here, and it's still sitting below the 200 weeks moving average, which is the red line. Let's see if it develops the next one. I think it still has a chance, but it is right now disappearing as we speak. The most interesting and the most important closures of next week would be on Wednesday, monthly and the 2-month closures. So far, the candle is on track for a bearish continuation one. And if we look at the 2-month frame, it's more concerning at this point because it will be a very strong confirmation of reversal on that frame. Let's see how it closes. Russell still has some chances in the next couple of days, but the odds are with bears right now. Now let's have a look at the charts. So this is the Elliott Wave chart, and we've been talking about this. We've been tracking it since the January of 2020. So this is when we called a big potential reversal. You all remember what happened in February, March of 2020. It was a huge drop, and this is what we said when the index was about 1660. We said that it is going to go down there, and this indicated this particular target here. And you remember how it ended. It ended very critically here. So this was the call on January 2nd, 2020, and this was the end at 966. So the index lost a lot, and that was quite a call. Now what we are looking for is another call that we made at the beginning of January. It looks like January is our call month. What we are seeing here, and we said that there is a good chance for index to retrace, and this is exactly what happened. So far the index hit the target. However, we are still not sure whether this is the bottom, the end of wave 4 here, or we would be looking for a bigger correction, something like this, an ABC correction towards wave, so towards the alternative wave 4, or maybe even a wave 2 of a super cycle. Let's see how it closes the month. It would be really instrumental. And if we look at the midterm chart, again, this is the chart that we've been tracking for a while, since November. The last major update to the chart was made. So far, we're seeing it nicely hit the target. The question is that right now, this wave doesn't look complete, and it looks like it needs another little wave down here to complete an impulse for potential wave 4. Or is it wave way? This is something that we don't know yet. And on the short-term frame, the same, the chart has been perfect. We haven't updated it since the beginning of April, technically, like major directions. And now what we are looking here is for an potentially extended flat or zigzag for wave B once we have this wave A, which is a potential impulse, or this impulse might not be completed yet. If it extends lower, for example, with another wave, impulsive wave 5, and this would be wave A of a much bigger impulse. So that's the perspective for Russell, and we know Russell for being harbinger for the other indices. Let's see how the other are tracking, and we continue on with the Dow Jones, and also we'll touch on Dow Jones transportation. So the candles closed for Dow Jones very similar to what they did for Russell. I'd like to say that recently Dow Jones formed a very strong bearish cross, 50 over 200 days moving average, and it looks like that 100 days is leaning towards making a cross with the 200 days moving average as well. But this might happen next week or maybe the week after, depending on the conditions. So far, I would say that the Dow Jones didn't even confirm a reversal on the daily frame. So it still needs a bigger and stronger candle, potentially crossing above this green candle's high. And if we look at the weekly frame, the last three candles, most likely a consolidation before the next move, the next leg lower. Another test is coming on Monday, 5-day frame closure. So far, it doesn't look like Dow Jones can do anything here. Let's see how it closes the day. If it forms another candle within this range, it would be just a consolidation one. And again, the same importance of the monthly closure. So far, the monthly is on track for a continuation candle. The 2 months frame is in a very interesting spot right now, so we can measure it at this point, and we can say that Dow Jones needs about 8% to gain 8% in the next 3 days in order to avoid strong bearish closure on the 2 months frame. Let's see if it is doable. Now let's move on to the next chart. This is the long-term one that we've been discussing since the beginning of January. So far, Dow Jones responded very nicely and almost hit the target. However, I'd like to say that with this move down, it technically invalidated an impulse for this particular wave, and I'm talking about this one. So potentially 1, 2, 3, 4, and 5. This is something that I would be looking for. So this potential impulse is invalidated, and the index has much higher better perspective to move towards the blue rectangle target, or even the red one. If we look at the next chart, this is what we've been discussing since the end of March. So far, Dow Jones hit nicely the target area, bounced off, and is looking for either wave 2 or wave A, potentially of a bigger flat here. The main thing in this chart is that the wave that Dow Jones made of the bottom was corrective, and now the only potential here is a leading diagonal, but we would have to wait for a while until we can see something shaping like this. So far, I'm looking for a very simple zigzag, potentially wave either A or wave 2. The next move I am expecting towards this target, perhaps the overlap of these two would be an ideal spot. And once it reaches here, there will be high risk of reversal down. Speaking about the technical perspective, we discussed it multiple times for Dow Jones and for the other indices. Right now, Dow Jones formed a strong bearish MACD cross, which is likely gonna stay until the end of the month, and it will be recorded here. So the previous one led to about 22.5% decline in the year of 2022. So perhaps we should expect something similar for this one. The only thing I'd like to mention that this cross is higher than the previous one, and we would be looking maybe for a bigger correction at this moment. And from that perspective, from technical perspective, Dow Jones is aligned with the other major indices. And now let's have a look at the transportation index. So it's not even that bullish on the daily frame. So far, the candles are bearish, leaning bearish, and there is a very good chance that they will be confirmed on Monday. The 10-day frame, which is closing on Tuesday, will need to be very specific. So far, it is neutral bearish, but in order to make a bullish move, the transports needs to rally about 5 or even more percent to form an unconfirmed bullish candle. The monthly perspective is kind of gloomy, and the freshly made 8x20 EMA bearish cross on the monthly frame doesn't add any confidence for the bulls. And if we look at the slightly bigger frame, for example, 2 months frame, the closure here will be very critically bearish, I would say. And if we look at our chart that was first posted, no, not this one, is it was posted in November 2024 when we said that Dow Jones transportation is done and we would be looking for a significant decline. And this is exactly what happened. So far, it is tracking towards this target. And if we look at the Elliott Wave perspective, I would say that Dow Jones transportation formed waves 1, 2, and 3. 4 is likely developing. Maybe it will take another few weeks. And after that, I would be looking for wave 5, either impulse or a diagonal movement. Of course, in case of a diagonal, it would take much longer. So far, my target is about October. Well, that's all for Dow Jones and the transports. Now let's have a look at Nasdaq. So Nasdaq is slightly in a slightly better position, and it's right now bullish. It confirmed bullish moves on the daily and a few smaller frames like 2 and 3 days. On the weekly, it still needs a little higher in order to confirm a reversal over this red candle. But the last week bullish engulfing, it gives us a lot of hope. So the chances are, at least for the beginning of next week, are bullish. But let's see how it closes. So this is the 10-day frame, which is closing on Tuesday. And if it closes with the candle like this, I would be considering it as the reversal. And the main test comes on Wednesday, when the monthly candle will be closed. I would say that so far the candle looks somewhat bullish, but it's not sufficient enough. So if Nasdaq makes another 3.6% approximately till Wednesday and closes above this green line, it will form a piercing line candle on the monthly frame. Most likely it will be bullish and with very good chances to move higher. Speaking about the Elliott waves, this is our long-term chart that we've been talking since November. So far, we are seeing the very first wave down, and I am considering this as wave A. Wave B is being developed right now, and it might take a while, couple of weeks or even couple of months to do this consolidation before the next wave lower. And if we look at the midterm frame, for example, this is another one that we've been tracking for a while, since the beginning of April. No changes here, minor adjustments from timing perspective. So the wave up since the beginning of April has been corrective, and why I'm looking for another higher high perhaps for wave A to complete. It might be wave B, but for after wave A of that size, I would expect it a more complex wave to develop. And if we look at the short term, this is the perspective we've been tracking on a daily basis. I would say that Nasdaq needs to terminate its wave somewhere here between 20,000 and 21.4K. Otherwise, if it makes the reversal faster, it will be considered as a truncation for the wave ABC, and it might not be might not lead to very good consequences. We might see a very sharp reversal. So that's the perspective for Nasdaq, and now let's talk about S&P 500. So the candles are somewhat similar to what we were seeing for Nasdaq. The daily is bullish, and the weekly, or the 3-day candles also formed a bottom here. The weekly is not there yet, so I discussed this earlier that it needs to close below 56.9530.31 on Friday. However, it failed a little bit, but still had a chance because it climbed above the major resistance, now support point. Speaking about the monthly closure, it is again concerning, and right now the candle is somewhat neutral bearish, but if we look at the bigger frames, for example, the two months frame is shaping for a very strong bearish candle, and the S&P 500 might need a lot to reverse this candle. So technically, let's say it needs about 8 or even more percent to rally in the next 3 days, which is kind of very improbable. Now let's have a look at the Elliott waves, large Elliott wave that we discussed since January 11th. So far, we can see that S&P 500 hit the target and surpassed it. However, it was saved here just by several points above the 4818.62 line, which I would say a critical path here, so critical level to cross. If it crosses, then the green path, potential 1, 2, 3, 4, and 5 will be invalidated, and we would be looking for a purple one toward 3400 or even lower. If we look at the shorter term frame, something that we are tracking on our daily sessions since the beginning of April, so far this wave looks corrective and it is shaping either zigzag or a bearish flag. So the ideal target remains the same, 57.62, 56.85, somewhere between these lines. However, if higher or lower would also be acceptable, and I would say that it's very close to the minimal target for this move. And at this point, I'm looking for a purple path being primary here. So the very first wave of the top of the bottom will be wave A of a larger corrective wave B. Now let's have a look at very short term frame. So this is the dissected zigzag, and the ideal targets for it somewhere between 5600 and 5740. That's an ideal. However, it can go slightly higher. So far, this wave looks like an impulse. However, I cannot say for sure because it has two gaps which are not giving a lot of confidence when you count Elliott waves. So now let's move on to the technical side, and these are the four indices, technically futures. What we are seeing here is MACD alignment on MACD monthly cross. Among all of them, I'd like to remind you that Nasdaq and Russell formed these crosses in March, and the Dow Jones and the S&P 500 completed them at the beginning of April. So technically, we are still looking for a confirmation at the end of April for these crosses to be recorded. And I ran some statistics, and in order to revert these crosses from that position, Nasdaq needs to rally about 7%, S&P 500 needs about 5%, Dow Jones 6%, and the Russell about 9%. They need to add in the next 3 days in order to reverse these crosses. Well, I'm saying that's a very tall order, next to impossible, but let's see what happens in the next few days. So this is the technical perspective, and now let's have a look at the large caps and their perspective for the monthly closure. So far, if we look at the monthly candles, for example, for Microsoft, it looks like it's going to be a piercing line here, and this could be a bullish reversal on the monthly. However, if we look at the bigger frames, for example, the 2 months, it is not going to be bullish at this point, and if it happens, that will be the first break through the 8 periods moving average. And if we look at the 4 months frame, even bigger, this would be a strong bearish engulfing on the chart. So this is quite rare combo for this particular frame, and the last time it happened in January 2022, and it led to 8 months of declines. Well, this is something to keep in mind for this perspective. Speaking about the other ones, Amazon is technically in a similar position, so this candle shapes up as a neutral one. And if we look at the bigger frame, this would be a confirmation on a dark cloud cover if it closes like this, if it closes below the low of this green candle. Similar things are shaping up for Meta, and for large candle, two months frame or 4 months frame. So far these candles are bearish. And another, let's have a look at Apple, for example. Apple is not as bullish on the weekly as the other, and the monthly, that explains. So the monthly is rather bearish, and the 2 months is forming a confirmation for the Harami, and this can be viewed as a Harami or as a hanging man formation. So this is a very good chance for Apple to continue losing its value. Tesla is not quite clear, and so far the monthly is closing as a bullish Harami, and the 2 months is also forming a somewhat neutral candle. So if it closes like this, I would say Tesla has a very good chance to form a bottom here. And however, I would still be looking for lower prices before this bottom is complete, but it has a very good chance to be saved here. Speaking about Nvidia, for example, Nvidia is shaping with a neutral candle, and the 2 months frame can give us a clue. So far this is bearish, and the 4 months frame is looking for bearish engulfing. This would be a significant one, especially if we consider that the previous candle was totally outside the Bollinger Bands. Well, if we look in general, that large caps are more bearish than bullish. Now let's have a quick look at the monthly potential for the sectors. So far, the financial looks bearish. Technology is somewhat neutral, but we will talk about technology in just a few minutes. Healthcare will be confirming a bearish reversal. I doubt that we're gonna change anything in the remaining days. Consumer discretionary is somewhat neutral. Industrials are neutral, and from the 2 months and 4 months frame, both candles will be bearish. Staples, interesting. So this is like a second consolidation candle after a strong bullish on the monthly. I would say Staples has a very good chance to continue higher. Utilities are in somewhat similar position, but are closer to neutral. I would be looking for it once we have a final footprint. Energy, this is an amazing candle structure. We see the red candle, 3 consolidating ones, and another red one. If this red one closes at this level or a little lower, it would be a falling 3-method classical. So we would expect energy to move down, whether immediately or after a certain consolidation, but the move down would be very well in the cards. Well, so from that perspective, from the sector's perspective and from large cap perspectives, S&P 500 is not looking very good, and we have much more chances for it to continue its decline, whether immediately or after a certain pause, which might take a couple of weeks or even a couple of months. Now let's move to our special features of the day, and we will start with the global indices and evaluation. So what we are seeing here so far, this is the monthly frames. For Shanghai Composite Index, it looks like it is going, unless some like a super rally happens in the next 3 days, this index is going to close with a bearish candle, potentially ending this like 5 months, 6 months consolidation after a very strong bearish move, initial bearish move. Speaking about Hang Seng, after a very neutral doji, now it is likely to be confirmed the bearish path, and I would be looking for lower prices here. Nifty is surprisingly bullish, but it needs to close above the red candle high in order to confirm this reversal. If it fails, well, it will be just another bearish consolidation. So let me put the number here. So this is the line. So, and it needs to close about February's high. Japan is shaping with a doji, but at this point it is absolutely not clear whether it's going to be bullish or bearish on the monthly frame. If we look at the bigger one, the 2 month frame is shaping bearish, and it will be the first break through the yellow lines, the yellow support line since year 2022. Let's see how it ends. And for 4 months even stronger. After an advanced block on the 4 months, we would be seeing the bearish engulfing, looking for lower prices. Australian index, the next one. So the things down under are somewhat neutral at this point, and if we look, if it rallies in the next 3 days, it might form a piercing line, which would be a strong inverted hammer with a good chance to continue higher. The UK index, if it closes at this level, it will be a confirmation of dark cloud cover with a very good chance to move lower, and it would be interesting to see the exact level, because this two months frame is not clear yet. Speaking about Germany, so far this candle is not confirming anything. It's most likely neutral and possibly bullish. It looks like German's economy is doing really well, and no concerns there. So far, this candle could be also either bullish or bearish, and on the 4 months frame, another green candle. The only concern that it is way above Bollinger Bands, but we need to see first a strong reversal here. So far everything looks bullish or neutral. And speaking about Canada, my home country, so this is what is happening. The candle right now is neutral on the monthly frame, and it very well depends in the next 3 days how it closes. So far, if we look at the bigger frame, this is a concerning one. Today is April 27. So far, it is bearish engulfing on the 2 months frame, and it's kind of could be a neutral doji on the 4 months frame. So the biggest concern comes from the 2 months. If it happens, then the next 2 months might be very disappointing for the investors. And the final discussion of today, I would like to talk about the technology sector and see what is driving the price there. Let's start with the candles. Candles are bullish on the daily frame, and the only concern here is that the looming cross 100 over 200 days moving average. Most likely it will happen in the next couple of days. But at the same time, we might see an 8 by 20 EMA bullish cross on the same frame. If we look at the weekly, there is this fairly strong bullish engulfing, and the weekly bottom is not yet confirmed, so we would need to see a move above this high of this red candle. If it happens next week, well, we can consider it is done. And on the monthly frame, so far the candle shapes neutral, and we would be looking for at least, what kind of move it needs? About 4% technology might need to add in the next 3 days in order to close with a bullish candle on the monthly. The 2 months is somewhat concerning because the closure like this would confirm a reversal on the 2 months frame. So the next 2 months will be bullish, will be bearish from that perspective. So, and from the technical perspective, technology formed last month. It formed a bearish MACD cross on the monthly frame, and we did some technical and statistical evaluation. The targets would be somewhere between 160 145. So far technology fell to 172, so it's kind of close, but I'm still looking for lower prices. So, and so far the decline has been for how many? For 4 months. It's very sharp, very short compared to the similar one that we were looking in year 2022. So this is the sample, and let's see how technology closes the months. It will be really critical. Speaking about the charts, this was our initial call on February, when we said that technology completed an ending diagonal and is looking for a move lower here, hitting the target 190, which everyone thought impossible, well, back in February. But nevertheless, it happened, and technology lost at the lowest level almost 29%. Right now it's recovering, and the question is how it is recovering. So this is the most concerning chart, I would say. Technology possibly formed an impulse, a very strong one, of the top 1, 2, 3, 4, 5, and this is just the very first impulse of a much larger correction. Per Elliott Wave, the corrections never impulses, so if we see one impulse down, it must be another one after a consolidating period. So far, the wave upward have been corrective, so this potential higher high didn't happen. If it did, it would be an impulse. However, we have only 3 waves for wave A, B, and potentially this would be wave C of a bigger wave A. Oh, that's what we. Let me put the number here. So this would be wave C somewhere here. Well, so far the wave has been impulsive, and this green rectangle represents the most typical target for the impulse to complete. However, if we measure it by other Fibonacci ratios, the wave could end somewhere in the red rectangle or the blue rectangle. So far it is on track, and it might be there in just a couple of days. And I'm very concerned about the possibility of completing it before the end of the month, because we might see a very sharp and strong wave downward, which could be either wave B of a much larger correction, or would be the first impulse for wave see if we consider the green count. Well, that's the perspective. And one last chart I would like to show you is this one. This is the large scale long-term perspective for XLK, something that we are tracking since February. So far, no changes here. Most likely it completed wave A, and now we are looking for wave B. And I would like to say that the bigger impulse upward has been invalidated because of this particular overlap. So these waves overlap, so now this wave cannot be wave 3. So the one that started in October 2022 and ended in February 2025, this wave cannot be wave 3 of a bigger degree. So it's either wave 5 or wave 1. And now we are looking for a repeat move towards this target. Well, that's a long-term perspective for XLK. Looks like it is well aligned with Nasdaq and other indices. And this is what we are seeing so far. Now let me wrap it up. This week's candles and waves are setting up for major decisions across asset classes. Volatility is teasing a reversal, but the verdict is not in. The dollar index looks ready for the next big chapter. Bond markets are whispering bigger moves. Canadian yields could spark surprises. Global indices show cracks and opportunities. And tech, XLK is painting a story you need to see before May rolls in. Tomorrow belongs to those who plan today. If you found this digest valuable, smash that like button, subscribe, and share it with your trading and investing communities. Drop your favorite ticker in the comments. We'll love hearing from you. And remember, starting Monday, early subscriptions open for Investing Angles premium services, designed for those who value structure, timing, and statistical edge. The more we grow, the more we share, and the more affordable it becomes for everyone. Stay sharp, stay objective, and as always, at Investing Angles, we chart the turn before the herd even blinks. See you in the next wave.